Welcome back. The SGX Nifty is off the low point of the day, but still not out of the woods if you're comparing it to the close that we had on Wednesday.
This is big. RBI is easing liquidity coverage norms for whom? I would assume it will be for banks, because they are the guys they regulate. And this will mean banks will perhaps be able to have a little more money. It's something like the OMO and the cut in the requirement of SLR that they announced about a month ago. It's continuing with its liquidity easing measures. Should be very positive for the markets initially. Now, how much of the easy liquidity goes to NBFCs and housing finance companies is another matter. So it need not necessarily mean good news all the way down, but definitely a very big positive for banks to start with. Okay,
let's see how the banks react. We have Ashwini Gujral, Mitesh Thakkar and Prakash Khaba joining us. Good morning, Ashwini. We had declining day on Wednesday after a gap up, and the market closed at the lowest point. We didn't trade yesterday when the globe was down, but today the SGX Nifty is indicating a deep cut. What would be your initial trade and what would be your overall trade today?
Well, good morning. I don't know whether to wish happy the share or not, because we are still confused when it was. If I would celebrate the share a bit more, I wouldn't be here today, because the big trade was on Wednesday. You should have gone after it with volume, etc., etc. Now, the problem here is that we started at 10,700 on Wednesday. Today, we are at 10,350 within a couple of days. So that means we are going to be oversold. But since there are so many negatives, hence we may not go up a whole lot. So there are days that you choose to do things on if you are trading real money, and there are days you want to let them go. Today is a day at best, individual stocks, but given a choice, I would not do much today and just go home and celebrate the weekend.
A minute, Ashwini, just hold on. What we are not writing is that if you increase your loans to NBFCs and then you get some bit of relief on liquidity coverage, it is against the credit that you disburse to HFCs and housing finance companies. So I think the relief goes all the way down to NBFCs and housing finance companies as well, because banks now get an incentive to lend to them. That doesn't mean they necessarily have to or will lend immediately, but it's a very big incentive that the amount of money that they have to invest in government securities to meet their liquidity coverage ratio norms can be reduced to the extent that they lend to NBFCs. We must remember that banks will have their own worries about what is the quality of that loan. And if that loan were to go bad, do I have the capital? So there will be other worries. There will be due diligence that they will want to do. But this is a very big incentive, you will have to say, for NBFC and housing finance companies. It eases the liquidity pressure. I think the central bank is stretching to the limit to help, ease the credit crunch. Yes.
Okay, let's see how the banks react. For now, it's positive more so for the NBFCs and the housing finance companies, because banks have the leeway to lend some more. Even the single borrow exposure limit has been up to 15% versus 10%. But the big question is, do the banks want to or do they find it a bit risky at times like these? Let's continue our conversation with Mitesh Thakkar and Prakash Khaba. Mitesh, how would you approach the Nifty at the index level and even the bank Nifty?
Good morning. So, on Wednesday, I think, we had a very strong fall, which kind of reversed the immediate trend on the downside. And getting below this 10,500, 530 zone means that becomes the immediate cap in the short term. Having said that, the SGX is suggesting 0.5% kind of a negative opening. And the next set of supports for the Nifty comes in around 10,320, 330 zone. So maybe, if we open down, we might actually test those levels. In case we hold them, then I am looking at some kind of consolidation between 10,300 to 500. Otherwise, I think the declining trend would continue, and 10,200, which was the earlier hourly low, I think that could be revisited. So there could be some more downside pressure. But what will happen in the meanwhile is that with this gap down, I think a lot of stocks will also give breakdowns, and maybe shorting opportunities will be well explored there, given the fact that the Nifty might open with a 50-60 point gap down and closer to support. Similarly, the bank Nifty, I think if it breaks 24,800, then you might get another 300-400 points on the downside. But opening around those levels, I would not be immediately wanting to short the indices.
Okay. Good morning, Prakash. You're trading the Nifty today? If yes, how?
Good morning. I'm not reading the Nifty.
Okay.
Clearly not. Because what the Nifty had a target on the upside range of 10,755. Did not reach there. That was the first sign of weakness. The way it sold off on Wednesday as if there was no tomorrow. And yes, there was no tomorrow. But now we have no tomorrow as well as day after. Why would I trade on the long side? It's difficult. So maybe if it comes down, people are short, they might cover shorts in the lower region. So maybe around 10,350, 10,320, where it could survive. Trading would be very, very difficult here because it opens the gap down. If it goes up, then you might short it to come down. Or it may just stay down. Who knows how you trade? We trade our points. We don't forecast. When you look at the Bank Nifty, exactly the same is the case. Strong resistance around the regions of around 25,800 zones. Possible we could see 25,800, 24,800. Possible even 24,400. But looks like next week there could be support in this lower region. So far doubtful.
All right.
Okay, actually, I just wanted to point out that this is only for NBFCs that the limit has been increased. It doesn't say housing finance companies. Okay. If they are treated as a separate category, then we have to look at it differently. So immediately there is a monster rally perhaps for Bajaj Finance and companies which are quite clearly NBFCs. I don't know if the definition includes HFCs because housing finance companies come under NHB. So it's possible that the RBI rule is not intended for housing finance companies. We will have to ask a banker this.
All right, let's make that distinction, of course, and we'll find out. But let's discuss individual stocks then. Ashwini, your thoughts on NBFCs and what would be your own stocks to trade today?
Let me add a couple of lines because, I'd like to add a bit of macro to my analysis. The big macro is rising US rates. You can tinker around with local macros, that won't help. And the other thing is that, if Supertech is in trouble, I think there are several people who are in trouble. Who lends to Supertech? The mid-cap PSU bank who knows that the money is not coming back. So they are going into a fresh round of a sell-off. So basically these smaller NBFCs, smaller PSU banks, etc., they will go to the cleaners. And that's why the other day I had said, all kinds of frauds will start coming out. Because in the financial space, it just runs through all institutions, and this could be a fresh leg on the downside, and it will have more ramifications. I think particularly financials, NBFCs have started a new leg of downside, which will end up in more fresh lows. So that way, 10,150, 200 should be a matter of time, because how many people can, RBI and government save? Having said that, individual stocks, going with the, the PSU banks today, I think they should remain under pressure. So that way, Indian Bank is a sell with a stop of 231, target of 216. DLF is a sell with a stop of 148, target of 136. PNB is a sell with a stop of 68, target of 62. Financial is a sell with a stop of 371, target of 356. And Biocon is a buy with a stop of 632, target of 650.
Okay, thanks, Ashwini. Just coming back to our other technical experts, I think Keki Mistry has joined us to give us a little more color on this release from the Reserve Bank. Good morning, Mr. Mistry. I don't know if you read this. It says the single borrower exposure limit of NBFCs which do not finance infrastructure has been increased. When they say NBFCs, do they include housing finance companies?
I would presume they do, because in the broad definition of NBFCs, I guess, to include housing finance companies,
okay,
even though housing finance companies have a separate regulator, but it falls within the broad category of non-banking.
Okay, no, I'm asking you because in the previous rule where they say that to the extent you have incremental loans to NBFCs and housing finance, they will get some relief in the amount of money they have to keep for liquidity coverage ratio.
Right, right.
Over there, they specifically say NBFCs and housing finance companies. But in the last clause, clause number 4, they say the single borrower limit for NBFCs which do not finance infrastructure stands increased. Over there, they have not specifically mentioned HFCs, which is why I'm asking you if RBI treats them separately.
Well, the regulators are separate. But from the broad definition of NBFCs under the RBI Act, NBFCs, any finance company which is engaged in the business of providing, any company which is engaged in the business of providing finance, including housing finance companies. So I guess it does, but it's something we'll have to wait for a clarity.
Okay. So how has life changed for you after this?
Well, life doesn't change much, excepting that banks which have got an exposure limit, which can lend up to 10%, which would earlier lend up to 10% for NBFC, can now go up to 15% for NBFC. So it benefits the larger NBFCs. It benefits assuming this applies to housing finance companies, which my sense is it will, then it benefits the larger housing finance companies.
Okay.
Mr. Mistry, just changing the topic. Earlier this week, the news about a credit rating agency, Brickwork, downgrading the rating of a real estate company, Supertech, has spooked a lot of investors and market participants. If you could tell us, are we sensing some more default from real estate companies?
I don't think we are sensing any default from real estate companies, but if liquidity is tight in the system, then delayed payments and something is something which is possible. But so far, we have not experienced anything like that.
Okay. Ms. Mistry, do stay on. Dinesh Kumar Khara, the Managing Director of State Bank of India, is also with us. Good morning, Mr. Khara. Thank you very much for joining. Could you run your eye over the release from the Reserve Bank? Does this mean that you can dispense more money to both NBFCs and HFCs? Does the borrower exposure limit rise for both?
No, actually, see, I think more important piece is how good or bad is the quality of the assets held by these NBFCs. As far as the liquidity coverage ratio relief is concerned, we were having surplus liquidity with us. And we are looking for, we are of course available to all the NBFCs who would like to have, who have got good quality of ALM and also who have got assets. And we have also gone on record saying that we can even pick up their assets also, and we can do some kind of a pool purchase from these NBFCs. So I think that is what our stand has been. So that's how it stands.
So for you, the caveat is that you will still use this only when you are sure of the quality of the underlying.
Of course. We cannot probably compromise as far as the quality is concerned.
Okay, but does it make, do you make more money in the sense you have to keep less money in low-yielding government securities and you're able to lend more? So is there a margin improvement?
No, that of course, that is a, see, if at all, quality is good, we would certainly like to lend. That is not an issue at all. So obviously it will certainly improve our earning potentials.
Okay. Mr. Mistry, I asked you to wait only to ask you, how much has the cost of finance gone up? I guess a person like you can still raise CPs, although that market is very tight. How much has the cost of money gone up from, say, August to now?
I would say from August to now, if we were to raise money through a bond issue, the cost would have gone up by roughly about 30 basis points.
Okay. And you are able to raise money?
Oh, yes. Oh, yes, of course.
Okay.
We raised money through a bond issue a couple of days ago, which was a 3,000 crore bond issue for 10 years.
Okay. Mr. Khara, do you expect, therefore, your exposure to NBFCs to go up, say, in the next 2 months? I mean, will we see some quick processing? Because this facility is available only till December 31st.
Yeah, that's right. In fact, I think as far as processing is concerned, we are quite on board and we would like to process. If at all it's a good quality risk, we will certainly be willing to process at the earliest. All
right. Thank you, gentlemen, Mr. Khara and Mr. Mistry, for joining us. Mrityunjay Mahapatra, the MD and CEO of Syndicate Bank, also with us, former SBI, of course. Mr. Mahapatra, how do you see this panning out? Will it mean margin advantage for you? Do you see quick loans to NBFCs?
What I see, Lata, is that in the coming days, there will be some easing of what we were seeing in the last 1 month, because the NBFC risk, as I told you also previously, was being taken at a higher level than what the credit rating agencies were putting at.
Okay.
So with this, the liquidity coming in and the relaxation that we are looking at, I think there will be some easing out. And given the fact that Syndicate Bank has a quite large chunk in terms of NBFC relationships, I see it as a kind of a little bit of a benevolent approach on the part of Reserve Bank.
We got this, as my colleague was saying, this downgrade of one real estate company on Wednesday, and that led to a lot of sell-off in housing finance companies. As a banker, will you prefer to use this facility for NBFCs rather than HFCs, or will you be willing to look at housing finance companies as well?
No, see, the interplay, unfortunately, what happens is that if you look at the holding pattern of all these NBFCs, at the end of it, it converts to a single parent or a couple of, related kind of a thing. So it is not as simple as it is that, the housing finance companies can be straight away looked at differently as compared to, let's say, an NBFC or an infrastructure finance company. So we will have to take it back to overall liquidity of the group rather than in any individual entity.
Okay. We'll have to leave it at that. Thank you very much, Mr. Mahapatra, for joining us. So, big positive news coming in for NBFCs and HFCs, but bankers will have an eye on the asset quality. Let's remember that.